Welcome to MogulCast, where we uncover the stories behind the world's greatest business empires. Let's get into today's story. On December 11, 2008, federal agents walked into a luxury Manhattan penthouse and arrested a 70-year-old Wall Street icon. Over decades, $65 billion belonging to 37,000 victims had vanished into thin air. What the world thought was an elite wealth management fund was actually the largest Ponzi scheme ever created in human history. The titan who built this empire had completely betrayed the entire global financial establishment. This is the full story. And it is worse than you think. The story began decades earlier in 1960. Born in Brooklyn and raised in Laurelton, Bernard Lawrence Madoff graduated from Hofstra University with grand ambitions. He started a modest penny stock brokerage with little capital and a relentless drive to conquer Wall Street. In an era dominated by established giants, breaking into elite financial circles seemed almost impossible. Yet Madoff discovered early that perceived exclusivity was more valuable than actual performance. We will come back to one specific decision: it is the key to everything. To build credibility, Madoff positioned his business around close family connections. He brought in his brother Peter as senior managing director and chief compliance officer. Later, Peter's daughter Shauna joined as compliance officer, alongside Madoff's own sons, Mark and Andrew. To outside investors, Bernard L. Madoff Investment Securities looked like an unassailable fortress of old-school family integrity. The firm operated two separate units, an innovative stock brokerage division and a secretive asset management wing that few outsiders were ever allowed to inspect. Madoff soon transformed his market-making firm into a technological powerhouse. By pioneering electronic trading, he helped shape modern equity markets and eventually rose to become the respected chairman of the Nasdaq Stock Exchange. His firm grew into the sixth-largest market maker in S&P 500 stocks. That legitimate reputation gave him total authority on Wall Street. Elite investors, prestigious charities, and international feeder funds practically begged him to take their money, believing his asset management strategy was virtually immune to market downturns. Year after year, through bull markets and deep recessions, Madoff reported steady, double-digit positive returns. He rejected thousands of potential clients, weaponizing artificial scarcity to make his hedge fund the most coveted club in finance. Institutional funds funneled billions directly to his private accounts without questioning the underlying mechanics. His client roster expanded across dozens of countries, attracting universities, global philanthropies, and high-profile celebrities. It seemed like the greatest wealth generation machine ever built. But not everyone was celebrating. The public believed Madoff was an investing genius who pioneered a proprietary trading strategy. But here is what the media completely got wrong about this. Madoff was not executing brilliant options trades that beat the market. In reality, he had stopped trading securities for his asset management clients decades earlier. The money sent by new investors was simply deposited into a central bank account and used to pay off redemption requests from older clients, creating an enormous financial illusion. The entire wealth management arm operated on pure deception. An ex-trader later admitted in court to falsifying records, generating millions of phony trade confirmations that were printed on retro computer systems. Whenever the U.S. Securities and Exchange Commission opened investigations into his unusual trading volumes, Madoff used his prestige as former Nasdaq chairman to disarm investigators. Multiple federal inquiries closed without uncovering the massive fraud, allowing the black hole of debt to swell into tens of billions of dollars unchecked. The mathematical trap closed in late 2008 when the global financial crisis devastated international markets. Panicked institutional investors faced severe liquidity crunches and desperately needed their cash. Redemption requests flooded Madoff's office at a scale never seen before, reaching roughly $7 billion in a matter of weeks. With no actual investments backing the accounts and capital inflows freezing across the world, Madoff realized that he could no longer find enough fresh money to keep the scheme breathing. On December 10, 2008, trapped in his Manhattan office, Madoff broke down and confessed the truth to his sons Mark and Andrew. He admitted that the asset management business was nothing more than one big lie, completely insolvent and built on total fiction. Shocked and horrified, his sons immediately contacted legal counsel and reported their father's staggering confession to federal authorities. The FBI arrived at his penthouse apartment the next morning, officially ending decades of Wall Street deceit. On March 12, 2009, Madoff pleaded guilty in federal court to 11 felony counts, admitting he had transformed his firm into a massive fraud. Tens of thousands of victims saw their entire life savings wiped out instantly, forcing elderly retirees back into the workforce and bankrupting historic charitable foundations. And if you have made it this far, you already understand something most analysts completely missed: the greatest vulnerability on Wall Street was never complexity, but absolute, unquestioning trust. The fallout of the collapse dismantled the Madoff family entirely. In 2010, exactly 2 years after his father's arrest, Mark Madoff died by suicide. In 2012, Madoff's brother Peter was sentenced to 10 years in federal prison for his role in the operation. 2 years later, on September 3, 2014, Andrew Madoff died of lymphoma. Madoff himself died in federal prison on April 14, 2021, leaving behind a ruined family legacy and thousands of shattered lives across the globe. The scandal forced a complete overhaul of global financial oversight. Regulatory bodies instituted mandatory third-party asset custody rules, separating the wealth managers who advise clients from the independent entities holding client funds. Institutional investors completely changed their risk protocols, demanding transparent algorithmic auditing and real-time trade verification. The era of entrusting billions to secretive managers simply because of their prestigious reputation and social standing came to a sudden, permanent end across the entire financial industry. Remember that decision we mentioned at the start? Here is what it actually cost. In the early days, Madoff chose to sacrifice transparent, verifiable trading records to manufacture an aura of exclusivity and infallibility. That single choice evolved into a $65 billion catastrophe that destroyed his family, humiliated global regulators, and stripped 37,000 innocent people of their security. A short-term shortcut to gain prestige ultimately created the most catastrophic financial scandal of the modern era. The scale of Bernard L. Madoff investment securities remains unprecedented in modern business history. $65 billion fabricated on paper. Over 37,000 victims across the globe defrauded of their life savings. 11 federal felony counts admitted in court. A market-making firm that handled massive volumes of S&P 500 trading while harboring the largest Ponzi scheme ever discovered. It stands as an enduring monument to how completely charisma and prestige can blind the world's most sophisticated institutions. The greatest takeaway from the Madoff scandal is that elite credentials are never a substitute for independent verification. Madoff was not caught by sophisticated forensic audits or federal regulators. He was brought down solely when a broader market crisis made continuous cash payouts mathematically impossible. When an investment promises consistent, market-defying returns without transparent proof of actual execution, the illusion will always collapse under pressure. Trust without verifiable accountability is the single most expensive mistake an investor can make. If you want to understand how this pattern repeats across every major business collapse, the next video covers a story with disturbing parallels. That one is next. That's the story for today on MogulCast. If you found this valuable, subscribe and hit the bell. A new Empire story drops every single weekday. See you tomorrow.